Welcome back to Fast Money. Citigroup making some big calls on the internet space, saying Wall Street is just too bullish on digital ad spending. Analysts recommend staying away from names like Alphabet, Facebook, and Twitter, where estimates could be too high, and to instead consider Amazon, which has been a relative underperformer in the group. Is this the right way to play the space, Bonawyn?
Well, I'm certainly not betting against Alphabet, and I can understand the bullish case for Amazon. What I will say is that it's really hard for me to argue against your logic for looking at personal consumption for like a bottom-up approach. But when I'm looking at margin of error, and it's 3 to 5%, and I'm looking to set up a short, I need more than 3 to 5%. I need a little bit more meat on the bone for me to be comfortable taking the risk requisite for me to establish that short position. So that's really the caveat that makes me, kind of have a little bit of pause with the view there.
It's interesting, too, because effectively, Guy, they're saying to move away from the names largely considered as value within the space and go to the higher valuation names at a time when, theoretically interest rates are headed higher.
It's interesting they threw Pinterest in there as well. I'm not certain why, but I get it. Ad spend, it makes somewhat sense. Listen, I'm with Bonawyn on this one. I think you flee from Google at your own peril. I understand the stock has sold off recently, but I think in terms of a business model, it's hard to sort of argue against it. Amazon, I understand. Listen, Facebook brings with it its own set of problems. A lot of it Facebook induced. And I'll say again, for the seemingly 100th time, if ESG investing sort of captures Facebook's attention or investors' attention against Facebook, that's it. Party's over. It hasn't happened yet, but the stock is certainly trading that way.
Pete, you with Citi on this?
I don't agree with Citi. As a matter of fact, I think Facebook, we've seen time and time again, we've seen how it's been so Teflon. It's one of my favorite names. I've held it for an incredibly long period of time. I continue to hold it. I'm not shaken out. I still love the fundamental story. We talk about eyeballs all the time, right? We talked about it with Netflix earlier, and I think this is all about eyeballs. Look at all the different verticals that Facebook has, and they're constantly, somebody's always after them, Mel, and it's usually Facebook's own fault. And yet the stock just continues on that path to the upside. I know it's pulled back. I like it. And as a matter of fact, I'm probably eyeing up an opportunity to maybe re-add to the position.
Yeah, Karen was doing that, too, looking to add to her Facebook position. I mean, there were Instagram hearings on Capitol Hill today, Tim, and the stock was flat.
Look, these hearings are a folly, and the senators that are asking questions are probably still using dial-up or getting faxes or I don't know. But the issue with Facebook and the social issues on the social network are things that I think are ultimately the problem with the valuation and why it trades cheap. Let's talk about Amazon, because I totally agree with Citi. This stock's been an underperformer because the comps were just so tough. Well, guess what? Those comps are just about to get a lot easier. And the e-commerce growth, which Citi is at the front of the line by far, that COVID punctuated and accelerated, just another trend. We talk about this all the time. Look, Amazon, to me, is also growing into that valuation. I realize it's not a cheap stock, but relative to itself and the ability for them to turn the levers, AWS is still an enormous growth engine at a time when a lot of people are chasing cloud. Amazon has done nothing for a year. If this market's going to move higher, Amazon's going to take it.
Yeah, and Guy, you've always said don't bet against the U.S. consumer or the consumer in general. Here we are, Citi saying... No.
Yeah, absolutely. Here we are. I'm with Tim on that one. Absolutely. I'm 100% with Tim on this one. Amazon is growing into it. I mean, listen, it's Amazon's world we just happen to live in. And just to Pete's point, I get it. 100% I get it. Everything that Facebook has done, it has not affected them. My only concern with Facebook, and it's been my only concern, is if people start talking with their pocketbooks in terms of investing and ESG dollars and forcing people out of the name. And listen, we saw it happen to Big Tobacco years ago. I put Facebook right there in terms of some of the health benefits or the opposite of benefits that Facebook creates.